So today we're going to talk about hotel financing options, and in particular the SBA. Now the SBA is the equivalent of agency debt for the hotel class. Now there's two types of SBA loans. There's the SBA 7A and then there's the SBA 504. First, let's talk about the SBA 7A. Now some of the benefits of the 7A loan are it's a quicker approval time. Typically you go through a preferred lender which can directly approve the loan without having the need to go back to the SBA and get an additional approval. Some of the drawbacks of the SBA 7A loan, however, are it typically has a higher interest rate, anywhere from prime plus a quarter to prime plus 2.75%. Now that is a floating rate and it adjusts quarterly. The good thing about the 7A loan is you can finance up to 85%. Now in some cases they say you can finance up to 90%, but I have yet to see that, so I typically like to say 85% is the rule of thumb. The loans are fully termed, and so you don't have to refinance in the middle of the loan, and they're amortized over 25 years. Another benefit are there's limited covenants to the SBA 7A loan versus a conventional, so you don't have DSCR requirements and things like that. The prepayment penalties are a step-down model, so they decrease from 5%, 3%, and 1% each year. Another good thing about the SBA is you can finance CAPEX and even get working capital. Now, the SBA 504 is the next option. They typically have a longer approval process and you have multiple parties to work with. You've got a partnering bank which takes the first position lien, and you've got the SBA which takes the second position lien, and you work through a CDC. Now, the good thing about the 504 is you get a much lower interest rate because you're able to get something called an SBA debenture rate, which right now I believe is 6.5%. And then the first loan is another similar prime plus whatever the margin is from your bank. Now this 504 option is great for refinancing because you also are able to get qualified business expenses as cash proceeds when you do refinance. And the good thing about the 504 as well is when you do close on the loan, you typically get a longer interest only period for the first 3 to 4 months.